Hey everybody, Boris, welcome to the weekly technicals for November 21 through November 25, 2016 for the majors for euro dollar, dollar yen, and pound dollar. And really the story just continues to be more dollar power. There's just absolutely nothing to say. Dollar just broke through every possible level. In fact, we're at higher levels now than we've been since the Clinton administration in the dollar index. Clearly a very, very strong move because U.S. yields now have just skyrocketed all the way up to above the 225 level, and the spread between the U.S. yields and the rest of the world that just continues to expand. That, of course, is giving dollar just tremendous amount of power. Having said this, though, we're now probably reaching some very, very serious overbought levels, certainly both in the euro dollar and the dollar yen. And I think at this point, caution is of the order. There, at very minimum, we should have some sort of short covering, mild bounce back at the very key 105 level in the euro dollar, and probably some resist points at the dollar yen 112. We've had just a massively strong one-way breakout moves here. All of those positions probably are going to offer interesting opportunities to re-short the dollar against the euro, to buy the dollar against the yen. Dollar still very much remains in an uptrend, but the one thing that I think is kind of interesting is that whenever you get these parabolic moves, they also usually come with parabolic corrections. So definitely caution is at this point, I think, of the order. We don't have very much data on the books this week. We are actually half week in the U.S. market. By Wednesday, we're going to be dead after because we have Thanksgiving holiday in the U.S. market, so all the data is going to be pretty much stopped after that. As far as U.S. side goes, the calendar just only carries, I think, new home sales, PPI data, not really much of any interest for the U.S. side. On the European side, we have some PMI data that probably is going to show improvement. All of this stuff, ironically enough, of course, very, very beneficial for European companies because the euro now is markedly lower just in a matter of weeks than it was after the election, and that should start to translate into much, much better earnings and sales for the European companies, and probably going to hurt a lot of U.S. profits as we go forward. So one of the interesting things that I read over the weekend, I think is a very interesting metric, is that the Fed views a let me just make sure I got this right. I think a 10% appreciation, I think that's the correct metric, a 10% appreciation in dollar index, which is what we've had really over the last month, as equivalent to a 1% tightening on the Fed funds rate. So although the December Fed funds rate is pretty much assured at this point, I think the much more interesting story could be the Fed is going to be far less likely to want to tighten more because they'll view the strong dollar as doing tightening for them. So we'll be watching this all very carefully. But of course, the dollar breakout rally has just been enormous. We've been on top of it for the last 2 weeks, but I think even we have been surprised by just the ferocity and the intensity of it. So let's just take a look at where the levels now fall. The euro dollar resistance 107, now very, very near-term resistance here, and the support at this very key 105 level. 105 is just psychologically strong support level. It's certainly going to probably, I think, bring in some bargain hunters because I think there's very little chance that the euro simply goes straight down to parity. There's ultimately probably a very good chance it could go down to parity, but we need some fits and starts and some recorrective moves that probably take us back up towards closer to 110 at this point. But 107 is the near-term resistance, and dollar yen, we blew through the 110s. I mean, just blew through the 110s. It's been a very, very one-way market. I do think 112 probably presents a little bit of a correction. 109 at this point, certainly the near term, and it's very possible that we could just slice through 110, 109, all the way down to 108.50 before dollar yen finds some support. It tends to correct itself very, very quickly and very fast. Pound has been the odd man out here because there's been sort of two-way traffic on the Brexit issue. We had positive Brexit news in the sense that the courts were open to the idea of a parliamentary vote on Brexit. Then there was all sorts of confusion because the courts now open their way for Scotland and Wales to join the case. It's unclear ultimately how they're going to rule. They're going to hear the case at the beginning of December, and the ruling is not expected until after the new year. But if you give the benefit of the doubt to the idea that the judiciary is going to basically say that the parliament needs to approve Brexit, that could be viewed as pound positive. For now, though, the pound definitely took it on the chin this week, although it remained relatively strong against the other majors by drifting all the way down to the 123. There is second estimate of UK GDP on the books, but nothing much as far as data goes. Let's take a look at the charts here and just see where everything stands. So euro, you can see it's literally been less than a couple of weeks, just really like 2 weeks since the election. Not even 2 weeks, really a week and a half, and we've literally sliced. If you look at the high, 113 all the way down to below 106. Right? I mean, we were. Let me just sort of come in here, and you can see that we're over here, and we're now below the 106 level. So that's 700 pips in a matter of less than 10 days or 10 days. A very, very, very strong move in the euro. And those kind of moves just naturally invite a little bit of short covering. So if you assume that sort of we fell from the 107 as 107 was the key support level that we broke, that's now going to become probably near-term resistance. 105 very likely going to be the washout. I have a feeling that before the 105 they're gonna make bids to try to hold the pair. If we get any further continuation to the downside. So the euro could just do a little bit of a chop and perhaps retrace back down to 107. It's not a bad idea to try to buy the bottom at this point because you've had so many consecutive days to the downside. As a matter of fact, I think one of these, this is almost a record move to the downside. 1, 2, 3, 4, 5, 6, 7, 8, 9 straight days or 10 straight days to the downside. Very, very high probability that in the next 2 or 3 days we're going to get a pop in the euro. So I would be positioning for buy the dip story here rather than try to continue sell it all the way to the downside. Yes, 105 is possible, but I think beyond that it's going to be much more difficult given the fact that pretty much all the news is baked into the market as we go forward. Dollar yen, it's an inverse story, very, very strong move. Geez, I mean, look at this. We closed on the highs, super, super bullish close, but at the same time, right up against this 1144 resist point all the way back from May. And if we sort of come back out here, let me just go in the daily for a year and just zoom out of this out of the trade, we can see that over here is a lot more choppiness and a lot more resist points here around the 112 level. So I expect that another maybe 100 points max before we see a little bit of a correction. A correction back down to 110 initially, but realistically it could really come down all the way to 109, 108.50 on the dollar yen story. So again here, the upside is relatively limited, but still possible. But I would start preparing myself for either profit taking or some just mild counter trend moves to take advantage of the retraces. And then finally, here's the pound. So still showing relative strength because we certainly didn't collapse in the pound nearly as much as in the euro. But at this point, that whole big move towards the 125 kind of failed us. And we probably are going to be in a very choppy situation because there's going to be very little clarity as to where the Brexit situation stands. What will be troubling is if we break the 122s. That's a level we really need to watch very carefully. If we break the 122s, then indeed this could be a very distributive top. As long as we hold above the 122s, it's actually quite bullish, and we should have a second leg back up above the 126s in cable as we stand. So that's how the week shapes up. It's a half week, remember, because U.S. is going to go on holiday starting Thursday, and it really feels like it could be a corrective week here, where the U.S. dollar could find a little bit of profit taking, at least at the 105 level and at the 112 level in the dollar yen. Wish you guys the best of luck, the best of trading. Boris, over and out.